Hey everybody, how is it going? Welcome back to my channel. In this video, I want to do a little bit of a market update. Haven't done a video in several days, but I'm feeling pretty good today, so I figured I would get one done. But first off, I want to talk about the all-important CPI number that is coming out tomorrow morning. I'm of the opinion that the market is probably going to rally after the number comes out, unless it's just horribly bad. I think the market is forward-looking, and with oil prices coming down over these last several weeks, and that is one of the biggest drivers of inflation, I think the market is going to be forward-looking and like I said, unless something comes out really terrible, I think the market is going to be bought up after the number is released. So I actually have an order to buy some TQQQ calls for tomorrow. So I'm going to put my money where my mouth is. Hopefully I'm right. But I found an article right here, and I pretty much agree with everything that is written in here. So we'll just go over this really quick. But this article says why stocks could get a near-term pop after the CPI arrives. So with inflation likely reaching its apex, a benign retail inflation number should spur a risk-on rally, according to Wells Fargo. The June CPI arrives at 8:30 a.m. Eastern Standard Time on Wednesday, with economists looking for a 1.1% rise for the month and a 0.6% rise in core CPI. It says if the headline number is in line, slightly above, or well below consensus, there will be a near-term pop. Risk assets, says senior equity analyst Chris Harvey in a note that he wrote on Tuesday. And I am in complete agreement with that for the reasons that I just talked about. But the article goes on to say that we believe analyst bias and an asymmetric payoff structure is building a consensus that will be difficult to exceed. The 8.8% year-over-year consensus is the highest in recent memory and follows calls for peak inflation last month by many analysts. After May's CPI miss and last Friday's miss on payrolls, we now expect a near-term upward bias to forecast. So I think a lot of this stuff that has been negative, that's been coming out lately, has already been baked in. And I think the market is going to be forward-looking and look to get in front of this CPI number and, potentially cause a rally pre-market tomorrow morning. All right, well, the next chart I just want to show you guys is one I came across today. I found it to be rather interesting, so I want to share it with you guys. But this one is just showing the chart of the S&P 500 going back to the 1980s, so roughly 40 years of data on this chart. Right here, it's showing the New York Stock Exchange plus the NASDAQ weekly new highs minus new lows. Obviously, you can see we are in negative territory right now. That's no surprise. But what I found to be a surprise is just how bad it's been out there. We have 33 consecutive weeks of New York Stock Exchange plus the NASDAQ weekly new highs versus new lows. And you have to go all the way back to the depths of the great financial crisis to find it worse than that over these last 40 years, when it was 43 weeks in a row that it was in the negative side. And I don't know, to me, it doesn't feel like it's that bad out there. I know the famous line from John Templeton was, the four most dangerous words in investing are "it's different this time," but I don't know, it just feels like it is different this time, even though I know the market has been under pressure, which it seems like forever. I don't know, it just doesn't seem like we have any kind of a real capitulation yet, and I don't know if we're going to have one of those markets where we have this really deep fall into capitulation, or if it's just one of these bear markets that just kind of drags out what seems like forever. I guess we'll figure out that in, once we come to the end of this, but I just wanted to show you guys this. If you guys have any, comments on this, let me know in the comment section. I just thought it was rather interesting when I saw it. All right, so let's get into some market charts right now. I'm going to start off with the QQQ, which of course is the ETF for the NASDAQ. And we can see the NASDAQ is in a little bit of a triangle consolidation right here. At least this is the most optimistic pattern that I see. I mean, we could certainly say that it's in a little bit of a descending wedge formation as well. And these tend to break to the downside. So I guess it just depends on how you want to look at it. Now I'm thinking, like what I was saying before, that we're probably going to get an upward bias unless, the market just gets absolutely crazy. Now, I had a little bit of a gap up this morning. Before the market opened, the futures were pretty negative on the NASDAQ, but then they just got bought up as we got closer to the opening bell. Had a nice little gap up, but then it just, kind of lost its steam. And if we go to the minute chart, you can see, had a nice little gap up, sold off quick, started melting up a little bit, and then just formed a little bit of a rounding top, and then just fell right off a cliff. I actually have an order to buy some TQQQ calls, the 26 call, and I sat on the bid forever, and I didn't get filled, so I'm probably going to have to jump over and raise the price if I want to get filled on these, because like I was saying before, I do think that we're probably going to get a positive response to that CPI number. So I'll have to figure out here in the next couple of minutes or so whether I want to go in there and raise the price of those of the bid on those TQQQs to take a bet for tomorrow. But I don't know. I'm still pretty optimistic that we're probably going to have an upward bias. And in fact, if we look at the weekly chart, we can see we've got, 4 days or 4 weeks of consolidations starting. This is the early parts of this week. So we got 4 weeks in the making. Plus we got the MACD starting to flatten out and curl up. So I think, the situation is kind of set up, or the conditions are kind of set up to have, a little bit of an upward pop. Cross your fingers on that one. But let's take a look at the S&P 500 or the spider. You can see same exact formation. The moving average convergence divergence indicator is continuing to rise, even though the market has been pulling back. So that is a good sign. Momentum is still up. Taking a look at the Dow or the diamonds, you can see same exact thing. A little bit of a triangle formation with the moving average convergence divergence indicator continuing to rise up. So I still think the path of least resistance, shockingly, is up at the moment, but that could change in the blink of an eye. Let's take a look at the IWM. See, same thing. Had a nice little positive divergence right here. It's continuing to move up, but it's pretty darn weak. So not one of the best MACD positive divergences you're ever going to see out there, but a halfway decent CPI number could change everything tomorrow. Well, let's take a look at the USO. Take a look at the oil contract, and you can see the oil contract rolled over again, jumped up to the 8-period exponential moving average, and then rolled over. This is a very common technical pattern, and I still think we have a date with that 200-period simple moving average. So as long as oil continues to have some weakness, I think the CPI is going to come in at better numbers going forward. But I am taking this opportunity to add to some of my oil stocks. The only 2 stocks I added to today was CNQ. See, CNQ was weak again today, but this is my biggest holding in the oil sector. And I also added to Carnival Cruise Line. I can't help but add to my Carnival Cruise Line position. I mean, this thing is all the way down here towards the COVID lows. And unless something goes horribly bad in the world, these things are going to be profitable next year. And, before these things, started to trend down right before COVID, I mean, these companies were making tons of cash. So, it's going to take a little while to get through this mess that they've accumulated on their balance sheet, trying to stay afloat, no pun intended, but I'm going to take a shot with a small position on Carnival Cruise Line, and if this thing stays under 10, I'll continue to add little by little to it. Another one I thought was interesting today was Tesla. I was pretty optimistic once Tesla had this breakout 3 trading days ago above the 50-period simple moving average and out of this range, that brighter things were going to be ahead for Tesla in the near term, but unfortunately, had a false breakout, and that usually leads to more downside. So tomorrow is going to be a very important day. Another pattern I like is First Solar. Let me see here, Solar. You can see First Solar in a very nice triangle consolidation as well. I think this one has the potential to break out to the upsides. This is one that I have on my watch list. Another one that I see that's building up some momentum is Airbnb. We can see Airbnb making a floor above a floor and is continuing to grind sideways. So this thing is just building up pressure. And if we get a pop tomorrow, I wouldn't be a bit surprised to see a nice move in Airbnb. I have a long-term position in Airbnb, but I was considering buying some options just for the short term to take advantage of a potential pop, because a lot of pressure looks like it's building up over these last 4 or 5 days in Airbnb. Another one that I like is Dell. I don't like it as much as Airbnb, but this one is also starting to build up a little bit of a floor above a floor, run into the 8-period exponential moving average before it got knocked back down to earth. But I do think this one is building up for a potential pop to the upside. I don't feel as strongly about this one as I do about Airbnb, but a very nice pattern nonetheless. But I just want to show you guys those stocks before I ended the video. If you guys see anything interesting in the market, please let me know in the comment section. I appreciate it so much when you guys do take the time to do that. But I'm going to end it right there. Thank you so much for watching my video all the way to the end. And until next time, take care, everybody.